Good morning, everyone. My name is Sarah Adelaide Odampton. I'm with the UK-Ghana Chamber of Commerce. Would like to thank you all for signing up and joining us this morning for our quarterly tax dialogue series on current import tax regime and port handling fees. We are excited about this particular discussion because we hope we'll find answers to most of the market access barrier questions that we have as a country. At this point, I'd like to hand over to our regular host, Mr. Abeku Jankwansa, who is the tax partner, who is actually a partner and a director at PwC Ghana. Mr. Abeku Jankwansa, over. Thank you.
Right, so thank you very much, Sarah, and thanks to the UK Ghana Chamber of Commerce. Good morning to everyone who has made time to join us on this webinar. These days, when I'm greeting, I need to be extremely careful because you may be communicating with persons all across the world. So if it's afternoon, wherever you are, or evening, wherever you are, please consider my morning greetings as equally applicable to you wherever you are. Today, we're going to have a conversation as part of the quarterly tax dialogue, and we would be focusing on the current import tax regime and port handling fees. So essentially what the Chamber as an advocacy body does from time to time is to take feedback from its members and the general business community, create such a platform for us to have a conversation with the whole idea that this conversation would enable participants to better appreciate the perspective of government. It will also enable government to get feedback from us so that the various policies and how they are being implemented would be reconsidered if there is the need to do so. So as we usually do, we would always set the background to our conversation, and then we would go into today's panel discussion. When the UK Chamber or the UK Ghana Chamber of Commerce sent me the profile of those who will be on the panel conversation, I was so excited and proud to moderate today's session, and you would understand when I begin to introduce my panel members at the right time. Lastly, as we did say, the session is also meant to get feedback from those who are participating in today's webinars. So we'll have a Q&A session and a session for contributions so that the necessary actions could be taken. Now, I would encourage us all to come up with up to 7 points in this conversation that we are going to have. Your points may be made up of questions, so please, if you have any questions, note them down, post them in the chat, and we would ask our able panel members to help address the questions. And to the extent that the panel members may not be able to address the questions because they relate a lot more to policy or government policies, I'm very sure that they would pass it on and get us the answers that we are looking for. So as part of the 7 points that I would encourage you to do, please list your questions as part of them, list your contributions as part of them, indicate your feedback as part of them. But then in doing that, let us consider that we all have different perspectives to issues. And I believe that as we've always done, we would tolerate and accommodate the various perspectives of everyone in this webinar. By way of background, we all recognize that trade is very important in the development of any country. So when people keep saying the Africa we want, I try to bring it home as the Ghana we want. And today we are focusing on trade. What are the concerns that you keep hearing the business community see or consider as limiting trade, or specifically cross-border trade in Ghana? And I believe that my able panel members would help address the issues, maybe correct any wrong impressions that we may hold, and probably even share tips to make market access a lot more exciting. When we did survey, when we questions of the various members of the chamber and other persons with interest in business, the first two matters that they kept raising was that from their perspective and from the way they do business, they feel that our cross-border taxes, which is led by import duties and associated taxes, are quite high. What does high in this particular instance mean? I believe that my panel members would address it as we go on. They've also raised issues on high handling fees at the ports. And today we have two persons from the Ghana Ports and Harbours Authority to join this conversation to help address those matters. Related to these issues around delays in clearing goods at the ports. They have the feeling that the port is quite congested. They feel that they are being abused by officers at the port. And interestingly, some officers that we also spoke to feel that the traders also try to abuse the system. In instances where permits may be needed to support clearance at the ports, we tend to also find that there are some delays, and we're going to have conversations on that. Some traders still feel that the revenue or the Harbours Authority is not applying enough technology to improve efficiencies. Is that really the case? We'll get a chance to hear from our panel members and address any gaps that exist in that particular area. Some importers also feel that there are too many regulatory authorities at the port. So when I bring in my things and I want to get them cleared as soon as possible, there are so many regulatory authorities. Is this really the case? Has ICOMS, which was introduced by the Ghana Revenue Authority, not addressed a lot of these issues? My panel members would address them as we go on. And lastly, some of the hindrances to trade or market access, as the chamber puts it, are issues around information asymmetry and inadequate transparency in getting information. So people are raising, or businesses are raising concerns that it is difficult to even get the information that we need. And how do we get information to do our cross-border trade as freely as it ought to be? I will try to address that by way of a mini presentation, and I'm confident that my panel members would address the issues. And lastly, as I did indicate, there are so many benefits of trade. If these problems indeed exist, then there would be delays or loss of government revenues. And I don't think that is the kind of Ghana that we want, where we don't have enough revenues to address our concerns. So what I would do basically is to try to deal with where we are on government revenues or planned revenues, and to address a bit of the issues around information asymmetry. And then my panel members would address the issues as we continue. So we should remember that in all this conversation, Ghana is proudly the host of the Africa Continental Free Trade Area Secretariat. So the secretary of this prestigious institution sits right here in Ghana. For those who want to know where it is opposite the Bank of Ghana Annex, or close to the British Council, I should think, yes, the British Council, and close to the Methodist head office. That's where you find that nice edifice to show that we are proudly the host of the Continental Free Trade Area. Where are we as far as government revenues or planned revenues for 2022 are concerned? So last year, government said that we are intending to spend about 137 or 138 billion for 2022. We will probably have heard that government has said times and time again that because of some challenges in getting our revenues through, part of this may be slashed down. We're actually expecting the finance minister to make certain comments to us tomorrow through parliament for us to know what sort of measures government is putting in place to address some of the challenges that we are having. We were saying that of the means of financing this 138 billion, about 100 billion will be from revenue and grants. It is out of this 100 million that we have close to 7 billion coming by way of e-levy. and we know the challenges that the e-levy has had. Based on the budget, we're expecting that the e-levy would have been implemented from 1st of February, but there's already some delays. So we know that at least for the month of February and for the month of March, the projected revenues from e-levy obviously would be missed. And therefore, when we are having these conversations and giving government feedback, we would encourage us all to take a look at where we are as far as our fiscals are concerned. And we can then make the relevant input that we are looking at. By way of reminder, we would be looking at the current import tax regime and the port handling fees. In order to set the conversation also in context, I just wish to remind us all that these matters that we'll be looking at fall under two different ministries. One, under the Ministry of Finance by way of the import tax regime, and then two, under the Ministry of Transport for ports and handling. That is why when I get to the stage of introducing my panel, you would realize that their expertise cuts across these two ministries. As far as import tax regime is concerned, one of the things that we need to know is that this regime is specifically led by the Customs Division of the Ghana Revenue Authority. So today, one of my panel members is a high-ranking official of the Customs Division, and I believe that he would help address any issues relating to our import tax regime. The takeaway point from here is for us to note that the import tax regime that we have in Ghana is typically a regime that looks at value and imposes the tax. So let me explain. If you are bringing an item into Ghana, so anytime one feels that or one experiences that the tax that one is paying is changing, then it's going to be at least one of the variables changing. So either the rates of tax is changing or the value is changing. Now, because it is a tax regime, it ought to be supported by law. And the primary law for import tax is the Customs Act. But Customs does a good job to do beyond just collecting import duties and export duties. They also have to collect various related taxes. And those taxes could include VAT and its allied friends. And by allied friends, I'm talking about the health levy, the education levy, or the COVID-19 levy at a minimum. So whenever we look at the import tax regime, we would be going even beyond customs duties to all those various taxes, and we would address that today with my panel members. When we get into the area of port fees, port tariffs, charges, we should be looking at two entities, the Ghana Port and Harbours Authority, the Ghana Shippers Authority. And today, my panel members would address all these areas. So what are the concerns around port tariffs? Why are they the way they are? Why are we feeling the way we are feeling? And what is there that our panel members can share with us to help alleviate any challenges and also get feedback from us on how those things can be improved? Now, to move on straight to explain a bit on the import tax regime or the tariff structure that we have in Ghana. Remember, I did say that our import tax regime is typically a product of value and rates. The tax rates in Ghana for import duties range from 0 to 35%. It is not continuous. So what do I mean by it is not continuous? The rates could be 0, 5, 10, 20, or 35. Depending on what you are importing, the rates could vary. One of my panel members heads the classification unit of the GRA, and I'm sure he would help us understand how the GRA classifies products, such that if you think that a 5% rate should apply, but GRA may be thinking that the rate that applies should be 20%. Why is it that way? The other thing that we also need to note is that, look, because it is a tax regime, we must have a tax reference. And the reference for picking up these rates are in the document that we have shown. The minister did give an indication that we should expect an update to this schedule or to this harmonized system. And the reason is that typically every 5 years, this is updated. This document that helps us to classify items that are imported or exported are updated to take into consideration how the business community has changed, product produce have changed, amongst others. And I believe that my panel member would be addressing these issues. Just before I move away from this slide, I just want to share with us this particular document and what it means, because understanding this document would help you address a lot of your custom-related issues that you may have with the revenue. So my apologies, it's not showing too well, but I'm sure a lot of you have seen this document, which is titled a bill of entry. And this is a document that you declare the things that you are importing into this country for customs to review and confirm, and for you to know the amount of tax that you have to pay as far as an importation that you have done is concerned. You would have seen that there's a place marked 40, or there's a red mark which shows 40 there. That 40 regime essentially shows that this item was being brought into Ghana for the purposes of consumption in Ghana. And this is my own bill of entry that I decided to take for the purposes of this illustration. When you go on this, you would see that it shows how valuations have been done. So in this document, it shows that other valuations have been done, and I would explain what it means. The other place marked, and for those of you who can see, showing 44, and as I'm trying to highlight here, showing 44, it shows that when the container containing my item came in, the customs division marked it red, which essentially means that probably my agent or myself may not be at the level where it was going to be marked green and allowed to go without inspection. So it meant that for this item to leave the port, it must be physically inspected. When you look at it too, it shows other things. So what was the base value of the item I brought in? The GRA says the base value should be in euros, even though the thing is coming from the US. So they will show all this thing. And if you're able to see all this and understand it properly, you can address a lot of your custom-related matters. On the foot here, you would see that apart from import duty, there are a number of taxes that are being shown: import VAT, ECOWAS levy, network charge. All these things are things that customs divisions administer as part of the importation, and we are going to talk about it in brief and then move on accordingly. So whenever you import something into Ghana or you export something out of Ghana, that thing would be subject to the customs regime in Ghana. So if you don't import or you don't export, you don't have consent ordinarily with the customs division. Some of you would have noticed that on the slide, we have put Ghana in inverted commas. This is because there are certain dealings that you may deal with in Ghana, but then you'll be treated as if you have crossed the borders of Ghana. So for example, you engage with a free zones entity, and the law will treat you as if you have imported into the regime of Ghana. The next thing after importation, or after the thing has crossed into Ghana, we need to know how the item has been classified. Depending on how the item has been classified, your tax rate would either go up or would come out. And we are happy to have a classification expert in today's conversation. The rate of tax, as I said, would closely follow how the item has been classified. The rates can even depend on the time that you imported. So currently, for those of you who are aware, there are a number of entities that are assembling vehicles in Ghana. We have passed the law to support the work that they are doing. And part of the law requires that whenever you import a vehicle, or specifically a second-hand vehicle into Ghana, for example, your tax rate should be 35% and not the 5, 10, 20 that you tend to see now. It should go up to 35. That law, for example, has been passed, but it has not yet been enforced because of certain conditions that ought to be met. So if you brought in something, when we start enforcing that law, then it's taxed. For those of you who have followed the benchmark conversation and the postponement to March before we started implementing, you would notice that somebody who brought in something in February may pay something different from you who brought in the thing, say, in April. So the time that you bring in something can affect the rate that you pay. Just to end on rates, a number of people have been calling for reduction, abolition, variation of the extent of exemptions that we give in this country of ours. Government has heeded. There is now a bill in Parliament to consider exemptions. That bill would also affect the items that can be imported into Ghana without the payment of tax. And I believe that my panel member may address it if there are questions that come up on that. To end on the import tax regime, please remember I did indicate that the taxes that you pay on items that you import into Ghana is a function of value and the tax rate. The value is typically based on the cost, the insurance, and the freight that you pay. Now, one of the things that we need to note is that because sometimes the revenue may not trust the cost that you declare, the revenue may deem the amount that you have brought in, and it could be varied. So for those of you who bring in used vehicles, you would notice that how much you bought the vehicle does not really matter. For those of you who bring in things to sell, if customs does not trust you, they will use something they call a benchmark value to do that. So the whole issue around benchmark value, giving a discount, all are valuation related matters. Then we will then move on to look at where are the items coming from. Where the items are coming from would affect your freight. And depending on how much we are assigned to freight, it could also affect your insurance if the GRA decides to deem insurance. So as you may know, for those of you that GRA has deemed insurance on you, you pay a 1% of the amount if it is A and 0.875 if it is C. So please note it. And when they deem it, GRA would apply these percentages on the sum of your costs and the freight. Even the change in exchange rates can affect the amount of duties that you pay. So government may not have varied the custom duty rates. Government may not have varied the discount policy, but just movement in your exchange rate would affect how much you pay. Now, it is important that we understand this and take advantage of what we call the penalty and interest waiver. So by the end of June, unless it is extended, if you do a self-assessment and you believe that you owe customs, you can quickly go declare it and not have any payment in terms of penalty and interest to pay on the amount so disclosed. On the website, whether you go through GRA, Unipass, ICOMS, you can actually verify how much your agent has actually paid on your behalf to the GRA. And you can actually check to see how much you expect to pay for an item before you go through that. To end on the bit on customs, there was a document that was issued, and this is publicly available on the 16th, where custom is saying that there are a number of people who are bringing in fake documents, and they are actually calling on people to ensure that the documents that are uploaded into ICOMS are original and they are genuine. And without that, it means that we cannot improve trust with the revenue. And it would mean that a lot of the items that we should have used your cost, GRA would defer to using a benchmark rather than using your actual cost if they cannot trust you. Or you may even be prosecuted if you introduce or you submit fake or documents that are called fraudulent. So at this point, this last slide is just showing you that apart from import duties, there are a number of taxes which may not necessarily be an import duty, which may apply when you import. So you may pay a special import levy of 2%. You may pay exempt bank levy of 0.75. If you import items that are originating outside of ECOWAS, you would pay 0.5. Things that changed. Please note that even though custom duties may not have changed, you may end up paying taxes higher than what you expected. The other thing that we need to note is that there is this upfront 1% tax that we pay, which is shown on your bill of entries. That actually qualifies you for an income tax credit but a lot of people don't even pay attention to it and just add it as part of the cost of the item. So please note all this, and when we get into the conversation with my panel, we can address it accordingly. Today, we have the Ghana Port and Harbours Authority also with us. And as part of the research that we're doing, just to moderate this session, we saw that the Ghana Port and Harbour Authority has a very nice vision to reduce costs, provide efficient modern port facilities, aid regional integration, and support a safe port. So if we are complaining that the rates are high, what is the response in relation to the vision of the Ghana Ports and Harbours Authority? This document, which is or should be publicly available, shows the fees or the port tariffs that ought to be charged by the Ghana Ports and Harbours Authority. So it comes in 11 schedules. The first schedule shows the port duties. The vessel handling charges are also there. Stevedoring charges are there. Receipt and delivery charges are also there. And today, we will be picking up your questions and we can address issues, or my panel would address issues, why we may feel that some of the duties, port tariffs, are high, are either referenced to a foreign currency, the dollar, or they are actually stated in dollars based on what we are doing. There are certain things that are also publicly available, and this is the 2019 version that I saw publicly available. I'm still trying to get and to check even if there is a most recent version. And this version deals with charges that the Ghana Shippers Authority have negotiated on our behalf. So interestingly, one of our panel members sits on the board of the Ghana Shippers Authority, and I believe that he or she would be able to help address some of these fees and where the complaints on high port charges may be coming from. So if you have this negotiated rates and your agent is charging you more than you ought to be charged, then you may want to have a conversation based on this publicly available rates to find out from the agent why he or she is charging you more than you should be paying. So to end, we would be getting straight into our panel conversation. And to do that, today we have three highly experienced persons to join us for this conversation. The first person I would like to introduce, and as I did mention, is Mr. Enna Kweku Blegi. So I am called Abeku, and I saw Kweku, and I was so excited that I have my namesake to help address the custom-related challenges that we have. So Mr. Enna Kweku Blegi heads the classification unit of customs. Some may call it the Ghana Customs Technical Services Bureau. He has over 30 years experience with customs matters. You remember I talked about the HS code, which is essentially a reference for classifying products, so that when I'm bringing in something from China, for instance, and they don't give me the name that I call it, as long as I have the code, I can know which item has been imported and I can know the applicable rates. Remember I mentioned that depending on how you classify your item, the rates may change. And Mr. Enna Blegi would help us address issues on customs and issues relating to classification. So he is the Vice President of the World Customs Organization HS Code Review Committee. You would also remember I did mention that the harmonized code is typically reviewed every 5 years. We are currently using the 2017 version, and the minister did give an indication in the budget that we should be expecting the 2022 version. In addition to him, we have Madam Esther Jebidonko, who is the General Manager for Marketing and Corporate Affairs. So of course, she has a lot of concern when people are complaining and saying that as the landowner and the people responsible for our ports, why are the charges too high? I'm sure she would help address those concerns and ensure that the comments that are made do not tarnish the hard-won reputation of the Ghana Ports and Harbours Authority. Madam Jebidonko has 28 years experience in port industry. And one of the things I found exciting when I received her profile was that she is the first female terminal manager. So she has a lot of experience that she will share with us. You remember I said that the issues that we are going to be discussing falls broadly under two ministries. And when I got to transportation, I said we'll be focusing on the Ghana Ports and Harbours Authority and the Ghana Shippers Authority. So Madam, interestingly, is employed by the Ghana Ports. She has been a member of the Ghana Maritime Authority, and she sits as a board member of the Ghana Shippers Authority. So I hope and I believe that she'll be able to address all those stuff. For those of us who remember very well, one of the things that the Vice President was leading on paperless ports, she was part of the National Committee for its implementation. So just in case you've been importing things and it's as manual, please, she would address why those issues are the way they are. To work with Madam is Mr. Samuel Into Kumi. He's the general manager responsible for corporate planning. And as I read through his profile, one of the things that excited me most was his current interest in the area of pricing and charging practices at the port. Hopefully it covers the issue of the port tariff document that I showed. And I'm sure he would show a lot more light in that particular respect. Like Madam, he is very much experienced to the extent that he has over 30 years experience in the port industry. He is also a master trainer for the United Nations Conference on Trade and Development. I hope I got that right. Modern Port Management Program. So he is so much experienced to also help us address concerns that we have in that particular area. So at this particular stage, I would want to pause and then ask my first panel member, Mr. Bleggy, to give us his opening remarks and any reaction that he has to the presentation that we tried to do to get us all on the same page, and then we can continue our conversation. Thank you very much. And Mr. Blaga, if you can hear me, please feel free to come in and let's start with our conversation. Thank you.
Good morning to our distinguished guests and participants to this forum. I hope you can all hear me.
Yes, I can hear you.
Yes. This is just a brief overview of how the import tax system works from the customs point of view. Actually, if we have to start talking about tax, I don't think we'll leave here today. So we just have to be as brief as possible because the time at our disposal is very limited. Of course, I'm very much aware that the current state of taxation from the perspective of the trader might be somewhat different from the perspective of customs. But that's the reason why we are always here to help the trader through with all their concerns. And like I already said, this forum is an opportunity for our stakeholders and customs to interact and share ideas on how to engage in trade as easily and as painlessly as possible. You know, customs cannot do without the trading community. And so also can our traders not do without customs. Now, before the year 2012, all the nations or every nation within the West African sub-region was managing its own tariff and creating its own import duty rates. By tariff, I mean the combination of the harmonized system and the tax policies as given to customs to admit by governments. Yes, the harmonized system is basically just a collection of or tabulation of all goods that enter international trade. Every country uses the harmonized system, and then in that country, we marry it with government tax policy. Yes, so government tells us that for a pen or for this book, you need to charge so much in taxes, or the rate of taxation to be so much on a pen that you are bringing to the country. That's government tax policy. We marry it to the harmonized system and it becomes a tariff. Yes. So before 2012, every nation within the West African region was managing its own tariff and managing its own duty, import duty rate. However, the heads of states within the sub-region came together and signed a protocol for the creation of a customs union that will have the mandate of administering a common import duty regime, to be otherwise known as the ECOWAS Common External Tariff, or the CET for short. Now, the idea behind the ECOWAS Common External Tariff was to serve as the principal instrument for harmonizing ECOWAS member states and strengthening their common market. The ECOWAS Common External Tariff is therefore the application of the same customs duties, the same import quotas, and the same preferences by the countries within the West African region. The same import duties, quotas, and preferences are applicable to all goods entering the West African region, irrespective of the country from which they are coming. So the institution of the ECOWAS Common External Tariff in 2012 led to the creation of 5 tariff bands, like Mr. Abebujan Kwanzaa has said. Now, these 5 tariff bands are, first, we have a 0 rate for essential, what we call essential social goods. 2, then we have a 5% rate for what we call goods which are of primary necessity, like raw materials and capital goods. 3, we have a 10% rate for intermediate goods and for inputs. And then 4, we have a 20% rate for consumer goods or finished goods. And finally, we have a 35% rate for those goods which are deemed to be competing with our national industries. Now, what happened was that Ghana was not able to implement the ECOWAS Common External Tariff in the year 2012. We were able to do so in the year 2015. So since 2015, we as a country have ceased to have any control over the creation of import duties on products and goods entering into this country. All import duty rates are subsequently imposed from Abuja, the seat of the ECOWAS Commission. So, for example, consumer goods that have been subject to different tax rates in our former national tariff now have a single tax rate of either 20% or 35% import duty imposed by the ECOWAS Commission under the protocol of the heads of states of the ECOWAS sub-region. And then, for example, most machinery which was hitherto 0 rated in our old national tariff are now subject to a 5% duty rate under the ECOWAS Common External Tariff. So it means that for machinery, every country within the ECOWAS sub-region is supposed to apply 5% import duty rate. However, mindful of the fiscal and economic problems that any sudden change in tax rates will cause member states, ECOWAS subsequently created a mechanism whereby countries within the sub-region can amend their tax rates of up to 3% of the total tariff lines in the CET. So if, for example, the 2017 version of the ECOWAS Common External Tariff has a total of maybe 6,000 tariff lines, Ghana has the permission to create and amend and adjust up to 3% of that 6,000 tariff lines as and when the government feels it's necessary. Yes, which is what Ghana has done. And I'll come to that. Now, this dispensation given by the ECOWAS is known as the Import Adjustment Tax, or IAT for short. Yes, this dispensation was given to the various countries within the ECOWAS region for an initial period of 5 years, starting from the year 2012. But as I'm speaking now, this provision has not been revoked. It's still been used. Yes, it was supposed to have ended within a period of 5 years, but we're still using it. So Ghana, for example, has taken advantage of the import adjustment tax to revise downwards the import duty rates of about 113 tariff groups. Example was a provision where motor vehicle spare parts were in most cases reduced to a tariff rate of 0%. Yes, so those in that trade or in that industry bringing in spare parts for motor vehicles are subject to a tax rate of 0. Yes, like our friends in Abosokai, our friends, the motor dealers like Toyota Ghana, etc. Yes. There are also other deviations in applications of the IAT, however. So it's not every deviation which is a downward review by government. For example, rice, the importation of rice in the ECOWAS Common External Tariff is 10%, but the government has reviewed it upwards to 20%. But on the whole, the review as initiated by government or as implemented by government under the import adjustment tax is mostly on the lower side. Yes. So by and large, the government of Ghana has stridently tried to lower the import tax burden on the people whenever the opportunity presents itself. Yes. A typical example, as Mr. Kwanzaa has mentioned, was the institution of the 50% discount on the declared FOB value on all invoices submitted to customs by the trading community. Now it's been reviewed to 30%. Yes, there are other voices which are saying that it has to be scrapped altogether, but that is not for customs to say. It's a government policy for now. The government has also, since the year 2017, removed the import VAT on about 182 groups of products in the national tariff. All these 182 groups of products are legally subject to a 12.5% VAT rate under the Value Added Tax Act 2013, which is the Act 870, and the Value Added Tax Amendment Act 2019, which is Act 1005. All these 182 groups of products are now zero rated under the current national tariff when they are supposed to be 12.5% rates. So in conclusion, one can see that the government by and large has made very serious efforts to reduce the tax burden on citizens through many of these mechanisms. Now, import duty tariffs might indeed have been much higher, but for all these interventions put in place by government. Of course, the trading community might have its own views about how much tax they are paying and how they wish it to come further downwards. But fellow participants, basically, this is the situation as we have it now. Thank you for your attention.
So thank you very much, Mr. Blege. And if you don't mind, I'll simply call you Kweku.
Yes, thank you.
So Kweku, just to summarize, you've spoken about the path that we went through to where we are currently as far as our tariffs are concerned. Yes. So conversation has been going on since 2012 till we adopted it in February 2016. But even within the adoption, we have an import adjustment tariff that enables government to have some variation with the ECOWAS agreed rates up to 3% of the tariff lines. And that is what we have used, whereby somewhere in 2017, we gave some spare part concessions for vehicles. And we've also talked about some 182 products that we have given some VAT concessions to, right?
Yes.
So maybe in your case, before I move on to my colleagues from Port and Harbours, in your area of classification, what are the major issues that usually come to your attention? Because as we did indicate up to this point, the way in which goods are classified could even affect the taxes that one pays. So do you want to share some insight with us and the trading communities as regards classification to help them improve their experiences with the customs division. Thank you very much.
Yes, basically classification could be very complicated and very error-prone. Yes, from the customs point of view and from the trader's point of view. So what we ask the trader to do is just simply give us a very good description of what they are presenting to customs. Remember that at the point of classification, we are only dealing with documentary evidence. We are not at the port to see exactly what the trader is presenting to the customs. So we are dealing with documentary evidence. So all we're asking the trader to do is to give a very good description of what they are presenting to customs. Now, if we are not satisfied with that description, of course, we interact with the trader, and then when we are satisfied, then we go ahead and classify the product. The classification of goods and products is not without problems. We have a lot of appeals from the trader. So what customs does is we give full hearing to the trader. We invite the trader, if possible, to come in person and then further clarify what it is that they are presenting to customs. Remember that misclassification from the trader can cost a lot of money to the trader. Yes. Now your goods are going to be held up all the time that you are appealing the classification process, all the time that you are litigating with customs over the classification of your products. Yes, so we all appeal to the trader from the beginning to as open as possible to customs when you are describing your products. Of course, we all know that the trader would like to have a lower tariff rates. Yes, so sometimes they might try to misdescribe the product so as to let customs inadvertently misclassify the product. But remember that when it's discovered, it becomes more cost to the trader. Yes. So basically, this is what we ask the trader to do. You have to be as straightforward and open, as clear as possible in your description so that customs can properly classify your products for you. Thank you.
All right, so thank you very much, Kweku, and we appreciate the comments on classification, and I believe we would have a bit more time for me to come back and ask additional questions. So at this stage, we'll move on to Madam Esther Jebidonko. So Madam, we have had some preliminary comments on port charges. And as I said, for me, I see GPHA as the landlord. So anytime we get into your area, there are some charges to be paid. But you keep hearing people complaining or some traders. Before addressing that specifically, could you please give us your opening remarks and any general comments that you have to support this conversation? Thank you very much, Madam.
Thank you very much. Let me say good morning to all participants and everybody else on the platform. And I would also like to thank the UK Ghana Chamber of Commerce for inviting me to speak. By way of introduction, I just want to let our participants know that apart from the general policy efforts by governments to reduce the cost of trade, the port community, especially Ghana Ports and Harbours Authority and the Customs Division of GRA, who are the key government institutions responsible for the port management, its clearance, and of course, the charges and taxes, have also been doing a lot over the years to improve the clearance processes to make the port efficient and also to reduce the cost of doing business in the port. I mean, Abeku rightly mentioned some of these ones. I mean, the customs clearance itself have come a long way from those days, the Asikuda and then the GC Networks Blue. We went through the paperless process. Now we have IQs. And all these were efforts to improve the clearance process in the port to make it more efficient. GPHA, Ghana Ports and Harbours Authority itself, have also not relent on its efforts to get involved and improve the process and make things better for our traders who import and export through the ports. Ghana Ports and Harbours Authority has always been concerned about the infrastructure provision in the ports. We've done a lot in that area. If you look at Tema, for example, our Terminal 3, which is being managed by MPS, is one of the current facilities that we have provided, and we are proud of. It's actually comparable to international standards, and it has improved upon the productivity and save time for our importers and the shipping lines and all what have you. We have also at the port level actually done a lot in the technological area to ensure that we speed up the processes. I mean, we have deployed our terminal operating systems, I mean, both at MPS and GPHA. So we have vehicle appointment system, we have e-gate systems, I mean, e-payment systems have also been introduced and improved upon. We have mobile apps and what have you to facilitate payments for our traders. And in recent time, last year, somewhere April, the Minister of Transport also commissioned a special tax committee made up of the various stakeholders, including the Economic Management Team, Ghana Ports and Harbours Authority, Ghana Shippers Authority, Customs, our friends from the freight forwarding institutions, and GUTA, to actually review the port processes and procedures for exports and imports, and also to review the taxes and charges that are charged at the ports. And that was done vis-a-vis benchmarking our sister ports in the sub-region, Abidjan, Lomé, Cotonou, Dakar, and members went to these various places to take information on the kind of charges that goes on. And the report was completed and submitted to the minister last year in May. Some actions have been taken to try and work on the recommendations that came, and all that is also supposed to improve the efficiency of the port and reduce costs for our traders. Having said that, I would also like to make this major point that usually when we talk about the port handling charges, a number of people just look at it from the Ghana Ports and Harbours Authority perspective. But I would like to take this opportunity to indicate that if apart from the customs duties and levies that my brother talked about, when you are talking about the port handling charges, a number of activities or charges goes into it. And you have the shipping lines charges, you have the terminal operator charges, where you can look at Ghana Ports and Harbours itself having the terminal, and then MPS. We have the freight forwarding charges. We have the MDA charges, where you are looking at Ministry of Trade, Ministry of Health, fumigation fee, Ghana Shippers Authority, electronic notification fee. You're also looking at Ghana Standard Authority, Food and Drugs Authority, DVLA, if you are talking about vehicles, and a number of other handling charges at the port that does not directly come to Ghana Ports and Harbours Authority. And I think that Abeku with his introduction presentation, actually categorized what goes to GPHA in the form of core dues, vessel handling, stevedoring, and receipts and delivery. We may throw more light on those ones later, but these are other charges that take place at the port, and people misconstrued it to mean it's coming from the port authority. But all these people are providing a certain level of service at the ports. And so they charge, and I would want to say that these other charges are not directly controlled by Ghana Ports and Harbours Authority. The port tariff that Abeku has displayed is what is controlled by Ghana Ports and Harbours Authority based on our the GPHA law 1986, the PNDC law 160. That is what we are the generators of this tariff by law, and then we ensure that the terminal operators, including ourselves, so terminals like ourselves and MPS are supposed to abide by this tariff. But if you take the shipping lines, the freight forwarders, and what have you, they have the negotiations and regulated by Ghana Shippers Authority. And so every time Ghana Shippers Authority negotiates, even with GPHA, and then they are done with GPHA, the shipping lines, the freight forwarder, they publish the negotiated rates as shown by Abeku, and all our importers and exporters are supposed to go by this. And so, like Abeku said earlier, if your clearing and forwarding agent is telling you something else, you need to refer them to the publication that was done by GSA. I am also of the view that yes, sometimes there are some delays at the port and probably leading to congestion, but I think that it has multiple factors. This is as a result of multiple factors. And from our observation, most of them in recent times are coming from our shippers, our importers. They have the permits and exemption challenges, and then they also have the financial challenges. A number of them would bring the cargo before they are looking for the money to pay the taxes and clear the cargo. A number of them will not go to the right source, as in to the right clearing and forwarding agents who advise them from day one as to what to do, the processes that they have to go through and all that. But then they jump to do the importing, and then at the end of the day, they get stuck along the line. So we are having a lot of challenges where you have consignees leaving their cargo in the port for so long. And when they do that, it attracts certain charges that normally wouldn't have been paid by them, like the rent for storage and then demurrage for shipping lines. Because the Ghana Ports and Harbours Authority has given 7 days rent-free period for imports and exports, and then 21 days rent-free period for transit cargo. So once you have a number of importers clearing their cargo within these 7 days, and for that matter, need not pay any rent, but you also have a number of them go sometimes 6 months, 4 months, 3 months, their cargoes are in the port. Eventually, they go on uncleared cargo lists as customs terms it, and then customs would have to go through some process. Sometimes then the importers come back for restoration, and then all those processes, and then they are complaining of the high cost of doing business in the port. So in the nutshell, these are some of the general issues that I would like to clarify. And to rest my point on my introduction, I would also like to say that the Port Authority, Ghana Shippers Authority, Customs, and the other major players in the port community have been doing a lot to give information to our importers and exporters, especially through the clearing and forwarding agents who are their liaisons in the process of clearing. You have Ghana Ports and Harbours Authority engaging in terms of forums, meetings, to let them know the new things that have come, what they have to do. MPS is engaging the stakeholders, freight forwarders, and what have you. We have our GPHA website. We have a live chat and a space there where you can always ask of what you need, and then be responded to. We also have our flagship program on TV. We term the Eye on Port. We have used that medium to educate and to sensitize the port community and the public on a lot of these policies and activities at the port. Ghana Shippers Authority has been doing a whole lot in this area. They have the regional shipper committees where they engage the shippers to let them know what to do and what not to do, and to introduce them to the issues that are going on, the changes that are taking place in the industry, and what is required of them. At a point, Shippers Authority had crusade for all over the place for on demurrage, so that our shipping community can avoid the demurrage. They have also been sensitizing the truck drivers and owners. They've also been engaging the trade associations, the chambers, also to speak to them. And so some of these things are being done. The customs at the port, Tema Port here, have the Joint Customs Consultative Committee platform where almost all the stakeholders are present, and then the issues come up for discussions on these platforms. So yes, these are some of the things that the Port Authority with its other major stakeholders are doing to ensure that cost of doing business in the port is minimized, efficiency is at this high level, and it will make our ports competitive, and we make sure that the imports continue to flow so that governments can make its revenue. Thank you.
Thank you very much, Madam Esther. I would be coming back to you with some comments, but just to highlight and summarize some of the things that you've said. You've talked about the fact that there is a lot of education going on, but it goes through the clearing and forwarding agents. You've talked about some work that was done last year, for which a report has been submitted to the Ministry of Transport, amongst others. So we would be coming back to you for some questions. But in the meantime, let me go to Mr. Samuel Intokumi to also give me his preliminary comments, and then we can continue. Thank you.
Okay, good afternoon, panelists and colleagues.
Good afternoon.
Yeah, I also wish to congratulate the UK's Ghana Chamber of Commerce for organizing this forum. It's a good one to share information and perspectives on this particular subject. The subject of port cost is not a new one. It's been around for a long time and still of interest to many stakeholders, including even the government, because port costs affects a country's competitiveness for trade and even in attracting foreign direct investment. Port costs impacts the delivery, if you like, the retail price of goods, and then the landed price of our exports. So if the costs are high, naturally it affects the country's trade competitiveness, and that has a direct impact on its development effort. And because of this, this subject has received a lot of attention, and in GPHA is of a major concern. Let me say that port cost really is a function of port efficiency. How efficient is the port? And in this case, efficiency is defined, if you like, let me just simplify it, what? In terms of speed of moving cargo through the port and the safety of the cargo. If the cargo moves very fast, safely, you can say the port is efficient, and that impacts the cost, because the longer the cargo delays in the port, it accrues additional charges. So some of the charges are avoidable. If cargoes are abandoned in the port, naturally it accrues a lot of cost, because the port is a very expensive place to keep your cargo. Like we mentioned, there are various dimensions of port costs. One of them obviously is what you mentioned that relate to the custom tariffs, etc., that you went through. And then there's also the cost of handling through the port. And then there are also, like my colleague Esther said, there are costs that other service providers also levy, like the freight forwarders, tracking companies, other regulatory agencies like Shippers Authority, Ghana Maritime Authority, Food and Drugs Authority. There are various agencies that also levy some charges on the cargo that pass through the port. As far as GPH is concerned, it is our tariff. And then we are in charge of just that part of the port cost, the tariffs, in terms of the direct payment that customers make for the services that we provide. GPHA has the mandate per our enabling act to formulate the port tariffs, and then the formulation of the tariffs goes through the process. There's a legal requirement that we engage Ghana Shippers Authority to agree the rates. And then beyond that, as part of our customer service programs, we engage various trade associations and industry players to discuss tariff revisions. We do this very religiously. At the end of the day, the tariffs are formulated to reflect cost of providing the service, and then financial and economic objectives of the port operators. In recent times, GPHA had been running the ports alongside some private operators as part of government policy to expand private sector role in the port. That policy was informed by the need to improve port efficiency through the attraction of private sector investment in the development of port infrastructure, in tapping private sector expertise, knowledge, and know-how in the management and operations of the port. So currently, a large part of the operations in the port is in private hands. Notwithstanding this, the formulation and administration of the port tariffs, I'm talking about the tariff that GPHA is operators levy, the one that Abeku showed on his screenshot. Those charges or those tariffs are managed and administered by GPHA. And they provide the ceiling, the upper level which customers should be charged. All our operators or our licensees are obliged by the last agreement we have with them not to charge above those rates. Anybody who does charge above those rates is sanctioned if it's brought to our notice. So those are the charges. The other charges that other service providers levy, Esther mentioned it, like the shipping lines, like the freight forwarders, like tracking companies, and other regulatory agencies. Largely, that is not within the control of GPHA. And I know the Ghana Shippers Authority is involved in the regulation of charges of what is called shipping service providers. There's an legislative instrument, Ghana Shippers Authority Regulation 2012, LI 2190. It set the framework for regulating charges in the port. In a nutshell, I want to say that we at GPHA, we are very mindful of the impact of port charges. We keep an eye on it. In fact, anytime we are going to review our charges, we do that in the context of economic challenges or economic situations in the country, inflation, interest rate. And then we also look at our rate, benchmark our rate against what our neighbors in the sub-region are also doing. So we benchmark our rates against them. We do service benchmarking, and then we determine a fair increase in the tariff that we have to apply. Let me also add that because port cost is a function of port efficiency, the weakest link in that chain, port is the port value chain. The weakest link in it can impact a trader's cost very, very massively. I mentioned earlier on that if you left your cargo in the port for a long period, you incur a lot of cost. And then those costs will come in the form of storage rent. And then the shipping line also have a certain charge, a charge they call demurrage on containers. And those two charges, every day your cargo is left in the port, builds up. It's progressive. If you collect your cargo from the port within 7 days, you pay zero rent. You pay zero rent. You don't pay any rent. But once the cargo enters into the rental period, that is after 7 days, every single day, the rent increases progressively. And beyond 21 days, the rent increases further. The reason is that the tariff is designed to encourage you to move your cargo out of the port as soon as possible. Like I mentioned, port efficiency is defined by what? The speed and safety of the cargo. So if the cargo comes to move, let's say within a few days, maximum 7 days, you are able to control your cost. If the cargo is left in the port, Esther mentioned congestion, and then the port gets congested, it has two direct impacts. If the port is congested, it increases the cost of the port operator. And then secondly, also, it also reduces or it dilutes the quality of the service. So nobody wants congestion on his terminal. And the rent aspect of the tariff is designed to encourage traders or consignees to move their cargo as soon as possible. I'll stop here, as this has my initial comments on the subject. Thank you, Abego.
All right, so thank you very much, Samuel. Hope you don't mind the first name so that we can have a lot more things to say. A few questions have come in, and I would like to read them out. So maybe, Kweku, if you could help with the first one. One of the participants is asking for an explanation on why transactions within the free zone area are not considered as resident-to-resident transaction. I guess it's because it came up when I did mention that Ghana was in inverted commerce, because you may have some quote-unquote dealings with, say, an entity in Ghana, but there will be custom-related charges. So if you could please help address that question for our participants, we would appreciate it. Thank you very much, Kweku.
Yes, thank you, Abego. Basically, free zones, by their setup, are deemed to be foreign territory. Yes, free zones are set up to encourage trade so that they have certain special concessions given to them. Everything which goes on there within that enclave is tax-free and other special dispensations. Yes, so anything coming out of a free zone is deemed to be an import from a foreign territory into Ghana. Yes, I don't know whether I'm making myself clear to the person who asked the question. Yes, so that is why with free zones, you can't just not take anything and bring it out into town without customs trying to monitor what it is that you are bringing. You are supposed to, by the Free Zones Act, 70% of goods produced within the free zone are expected to be exported. So if the free zone developer wants to bring anything into Ghana, then it has to be subject to certain restrictions. Yes, like the payment of import duties and other things. Because when goods are being brought into a free zone, they are exempt from the payment of import duties. Yes, I don't know whether I've made myself a little bit clear.
Yes, you have. So in summary, to the one who asked the question, the response is that based on our laws, we demarcate free zone entities for custom purposes as if they are not within the custom territory area of Ghana.
Exactly.
And therefore, when you bring in things into outside of that area, which was demarcated as not part of Ghana, we now treat the transaction as if it's a foreign good now coming into Ghana proper, if I may say that way. All right, great. Yeah. But there's also another question here for you that has come up, and let me quickly read that out, please. It says that when you were talking about the classifications, and let me go up because I think we can it in the slide, and we also talked about. Good. The person is asking, why does the rate of import duty change when, for instance, the goods imported constitute, say, capital goods and goes for 5%, but you end up paying 10% as import duty? So let me give an example. Maybe in the mind of the person brought in, say, a motor vehicle, and this is just for illustration purposes. And the motor vehicle's rate, maybe because of the CC, is said that a rate of 10% applies. But then the person is saying that today you've explained that capital goods, following the agreement at ECOWAS level, should in default attract 5%. I don't know whether the question is clear. So the person is asking, why does the rate of import duty change when, for instance, the goods imported constitute, say, capital goods, which goes for 5%, but you end up paying 10%? Thank you very much, Kweku. If you could address that question for us.
Okay, thank you, Abeko. Basically, the tax rates that we apply to whatever products coming into the country are determined by the tariff. They are determined by the CET or the tariff. So there are certain products which basically are capital goods in the eyes of the trader, but in the tariff, they are 10%. They are rated 10%. I'll give examples. For example, in the tariff or in the CET, plastic sheets, plastic film, plastic foil, and so on, which are going to be used in the production of certain items, maybe in the factory. Yes, in the tariff are not 5%, it's 10%. Yes, and customs will necessarily have to apply the rate as it is in the tariff. An example also is, for example, somebody who is a furniture maker. Yes, he owns a furniture factory, and then he's importing, like, for example, medium density fiberboard. Yes, these are to the furniture maker, these are raw materials. Yes, but in the tariff, they are rated 10% as intermediate goods. Yes, but to the trader, they are actually capital goods because they are going to be used in the production of a finished product. Yes, so what is in the tariff is what customs necessarily have to apply. But government has this provision for manufacturers and traders. We have what we call the concessionary regime. So if you are a manufacturer and the product you are bringing in attracts a 10% tax rate, you apply to customs and we give you a concessionary rate of 5%. It's given to all traders and all manufacturers, provided you have a manufacturing certificate. It's so simple. Yes. So basically, that's how it works. Whatever is in the tariff is what we necessarily have to apply. But if you are a trader, you are a manufacturer, you apply to customs for a concessionary rate and reduce the rate downwards for you. Thank you. I don't know whether I'm clear on that.
Yes, you have. So in brief, what he's saying is that, yes, you might have seen that the default may be 5, but 10 is applied because in our tariff schedule, we would have brought in the thing and classified it as attracting a 10%. So you remember that at the beginning, I kept saying it all starts with classification. So if you get your product properly classified, then the custom duty rate would follow. And the bits I like so much, which Kweku has added, is that you may think the thing should attract 10%, but under our laws, after chapter 98, and some may call it the second schedule, I should think, or the third schedule.
It's part of the first schedule.
It's part of the first schedule, thanks.
Yes.
There are concessions for manufacturers. The critical condition, and that is in, I think, chapter 98 or so. Yes, 98. You should basically demonstrate that you have a manufacturer's license, which you would obtain from applying to customs. And based on the experience I have, usually customs will not just take your application like that. They would come to your field to come and check what you do. And then if they are satisfied, they give you that. And that could also be a means to reduce your duty rate. So let's take advantage also on it based on what Kweku has just shared. Kweku, interestingly, there are a lot more questions still coming. To accommodate the issues with the internet, I would try and end by 12:40, and I believe that 10 minutes should be enough. In other words, the 6 additional minutes I am granting should be enough to accommodate the internet challenges. So please accommodate us for the next few minutes, and then we'll bring this to a close. Because someone is also asking again, I think it means probably my friends at Custom need to do and give us a lot more guidance as domestic tax does, so that questions will not be coming plenty like this. The next one is, I talked about the penalty and interest waiver. So someone is asking, what can they do? In other words, let me read it in brief. It says, you made mention that companies engaged in imports can take advantage of the Penalty and Interest Waiver Act by applying to the CG for a waiver of penalty and interest. Can you please throw a bit more light on this? So if you could please share with us what you do internally on getting the waiver for penalty and interest on custom-related matters. If you could please share some light, that would be appreciated. Thank you very much.
Thank you. In relation to penalties, I don't know whether they mean customs penalties. With yes, customs penalties means there's an infraction of the law.
Yes, yes.
Okay. So you incur customs penalties when you are engaged in an infraction of the law. Yes, and the rules are set out clearly that it's only the Commissioner of Customs which can waive penalties when there is an infraction of the law. For example, you imported a certain number of products, maybe you've imported 10 boxes. On paper, you are declaring 10 boxes to customs of 10 boxes of shoes to customs. But at the port, at the point of examination, it's realized that it's actually 20 boxes. Then the penalty system kicks in. Yes. Now, if you want a waiver, the penalty is normally 300% of the value of your product. Now, if you want a waiver, or if you want customs to look at the level of the penalty you're going to pay, you apply to the Commissioner of Customs. It's only the Commissioner who can waive, who has the discretion to waive or reduce penalties. I don't know whether I'm clear on that.
No, you are clear. So maybe just for the sake of the person, maybe yes. What I will add is that in April last year,
yes,
the Ghana Revenue Authority introduced an administrative guideline. And what the authority explained was that if you have custom-related applications for waiver, all your applications to go through either the Deputy Commissioner for Operations or the Deputy Commissioner for Post-Clearance for processing and submission to the Commissioner. So as you've said, it is your Commissioner that can grant that. But in terms of procedure, please make an application to the Customs Commissioner, but through the Office of the Commissioner for Operations or the Deputy Commissioner for Post-Clearance. So yes. Please, the one asking the question, you can go on the GRA website, you would find the penalty and interest waiver application form. Please complete it. If you cannot do it, please contact your consultant, and that can be done for you. If you also wish for me to assist you, please, you can always contact me and I can assist you do that.
Yes.
There's also please remember. Yes, we could go ahead.
Yes, please remember that if by commissioner we mean anybody who is standing in for the commissioner. So it can be the deputy commissioner or any other proper officer who is working on that behalf.
Yeah. Thank you. Someone is asking that we are a member of the World Trade Organization, but to what extent are we complying with the agreement? I'm not too sure where this question is coming from. If you can assess, that would be great. It says we are a member of the WTO, but to what extent, in brief, I'm only paraphrasing, in brief, to what extent are we complying with the international agreements? Thank you.
Yes, thank you. We are actually complying with all international agreements, whether with the World Trade Organization or with the World Customs Organization. But the body which lets us align our taxes is the ECOWAS. Yes, that's the regional subgrouping for which we adhere to, you understand? So it's the ECOWAS which sets out the tax system that all the other member states within the ECOWAS region will have to adhere to, not necessarily the WTO or the WCO. There are other protocols that Ghana will have to adopt. For example, with the free trade agreement thing, Ghana will have to adhere to the protocols as laid down by the WTO. But when it comes to the alignment of taxes, is the ECOWAS which sets out that protocol for Ghana, as well as for other members of the West African states.
All right, so thank you very much, Kweku. And the last question I have, and this is coming from me, because I did promise at 40, I want to start wrapping up. So this goes to GPHA. So Madam Jebidonko or Mr. Into, whom we can help address it. And both of you did talk about, and I think Samuel did emphasize it, that port costs also affect port efficiency. And you talked about a 7-day free period for leaving your items at the port. And you also talked about the fact that the delays, some may have goods that they may not be able to clear, and all those things are what is creating the congestion. So as I was going through, you can see what I'm sharing on my screen now. I did talk about the fact that my CRMS, which is a customs risk management framework, was sort of suggesting that the thing that my agent was clearing for me should be marked red, meaning that it would be inspected physically by customs as far as that container was concerned. Of course, there will be so many reasons why they didn't put here yellow or put here green. The question I have for GPHA is that if there is port congestion and all those stuff, what steps can be taken and what can you probably do to aim at reducing the amount of reds, probably get more into yellow or even green to reduce the congestion that may arise from inspections at our ports? So Madam or Samuel, please feel free to address this question. And if Kweku also has anything to say, he can add it so that we can start changing the reds to the yellow or the greens to facilitate processes at the port. Thank you.
Okay, Abeku, thank you very much. It's the number of reds, as you have said. If there are many, it also delays the process. But customs is of the view that I think that they've not gotten to the point where many of our declarants can be that trusted. But we, at various meetings and forums with customs, GPHA and other stakeholders in the port industry have tried to impress upon customs to engage their other activities in establishing this trust issue so that we can move away from the number of reds that we get at the port. They have other systems to be able to establish the trustworthiness of some of these clearing agents or importers to the extent that those ones can be given the green, and then we have few to go through the red. They have their post-audit system, and this they can use it. And if we are actually also, we are of the view that if they actually handling the system very well, the inspection, the system that the risk system, if they are actually handling the risk system well, where they are giving feedback to the system as to those who are deviating from the truth, I'm sure by now we should have an improved system, because it was one of the major issues that came up when we were implementing the paperless, and the view of everybody, or what we were all looking out for was for the number of reds to decrease over the years. But I think that we are not there yet, and I agree with you that we should do more, customs should do more, so that we get to that point.
Okay, thank you very much, Madam Esther. Samuel, any comment from you, or you are okay with what Madam has shared?
The only comments I will add is the determination of a box as red, green, or yellow is purely a custom function, and it's based on their risk profiling of the consignment, and then they take various considerations into account. And then, like Esther said, if you're able to establish a high level of trust so that we get more green, it will add to port efficiency and then also impact port cost. Thank you.
All right. Thank you very much, Samuel. So, Sarah, anytime you invite me, I come and give the chamber work and I go away. So, unless you stop inviting me, I have another assignment for you. I believe from what Madam was saying that this has been something they've been looking at over the years. I think the chamber should follow up and see whether you can get a proportional report. And what I mean is that every year, probably go back a number of years, what is the proportion of red to the total value of imports that we've had? And then we see whether it's increasing or reducing, because that will give us an indication of whether the trust levels are improving or reducing, and what we can do to even support customs and even GPHA, because they're also concerned with the congestion at the port. And as I keep saying, so that we can all build the kind of Ghana we want. People keep talking about places like Singapore and stuff. I think they are humans like us, and if they have built a trust system to move things faster, and of course, customs, I wouldn't begrudge them with doing a lot of reds if they can't trust that we will do the right thing. Sarah, please note that down and see how best we can have a project around that to improve that. So let me start receiving final comments and wrapping up.
And then, please, let me just interrupt a little, just one.
Yes, madam, go ahead. Yes.
Yes. About this risk assessment thing, we're looking at the system where customs should be able to process and apply risk assessment to goods declarations prior to that arrival of the goods, you understand? So that the goods can be released immediately upon arrival. We're still trying to look at it, whether it's possible to the system like that. Yeah.
Okay.
Ghana. Yes.
All right. So that's comforting, Kweku. So let me go with you. Probably in about 30 seconds, can you give us your final comments? And those comments could even include what support you need from the business community to help improve all these processes. Thank you very much.
That's to me, right?
Yes, that's to you. So your final comments about 30 seconds.
Yes. Customs is there for the business community, and we are always ready to help in trade facilitation, even though the business community might not find some of our policies palatable, but those policies are necessary, yes, for us to be able to keep this economy going. Thank you
very much. Samuel, a comment in 30 seconds from you.
Yeah, the comments I want to make is the shipper or the importer, exporter also has a role to improve or optimize his cost. One, by complying with the regulations about the trade, proper documentation, proper declaration, and also making all the necessary arrangements to clear the cargo ahead of time before the cargo comes. And then it could help him save cost.
Madam Esther, please, you have the final word.
Okay, thank you very much. What I want to say is that Ghana Ports and Harbours Authority is focused in making our ports efficient by providing the necessary facilities. And then we are constantly reviewing the processes and procedures to make the ports more efficient. So we require of our importers to also do their bit so that together we can minimize the cost of doing business in our ports. Thank you.
All right. So thank you very much. And on behalf of the UK Chamber, which is an advocacy body, to try as much as possible to assist businesses operate very well in Ghana and also contribute to the development of our beloved country. We've discussed the current import tax regime and port handling fees. For those of you who may not have been following the social media pages of the chamber, I would encourage you to do that so that you don't miss out on some of these sessions. For some of you, you have a couple of questions, but our sincere apology that we cannot pick them. Please contact the chamber and we can have a conversation later. If there's a need to do part 2 and our distinguished panel members are all available, I'm sure the UK Chamber can do that, to probably just have maybe just a Q&A session, assuming that we all have drawn the framework for the conversation. So I would like to say thank you very much, and I appreciate the opportunity to once again moderate the UK GCC Quarterly Tax Dialogue Series. Thank you and have a great day. And please accept our apologies for the internet issues and the overrunning in time. And may God bless us all. Thank you very much.
Thank you.
Thank you too.